Welcome to the Become Sensible podcast, where we discuss practical accounting, finance, and tax for everyday business. I'm your host, Jonah, and I'm here to show you that no matter what your business financial situation is, you can change it. Good morning. Welcome back to Become Sensible, where we discuss about tax strategy, business strategy, and business tax to help you to make the better financial decision for your business, save you in terms of tax, and grow the business well. So today we talk about a very important topic, and I think this can help you literally save tens of thousands of dollars, especially right now that you are in the thick of working on your tax return. And I know tax is not an exciting topic at all, but on this podcast, we talk about tax all the time. And in the efforts to help you to save in tax and have a strategy and the plan to save you tens of thousands of dollars in tax for you. So let's dive in. Today we talk about tax playbook. That's the simple, legal way and totally doable strategy to make you to have save $10,000 in tax and avoid overpaying tax. Because who actually want to overpay in tax, that money you actually can save and invest it into your business and or into your personal wealth. So let's dive in. First of all, we talk about why the business owners actually overpaying tax and how to stop it. The reality is I work with hundreds of business owners who come to me with a panic mode. That's when the tax season is come, because they say they have no idea how much that they owe in tax and how to navigate that. So basically yesterday I was on the call with one of potential client, and she basically got a tax bill of $185,000. From the IS for one of the mistake from her accountant, and it's surprisingly out of nowhere because he didn't know that they forgot to bring in one of the K1 into her personal return. Most of the time, business owners spend a lot of time to grow the business, build the business, and take care of the business. But when come to the tax and tax time, they normally don't have the people that help them to understand what's actually going on with their tax situation, how to help them to save in that. And they also don't know whether their tax were done right at all. So in this episode, we talk about how you can stop all of these situations and feel like you in the control of your tax situation. When it comes to tax, most of the business owner make it a passive situation. Okay, this is done for the year. Now I just need to file the tax, and whatever the bill is coming in, that is what I need to pay. This is more passive. But I believe if you understand your tax situation, you have the professional actually support you and help you to understand it and navigate it moving forward. Then you feel like you in control of your tax situation. And if this year, 2025, is the year that you say you've done all of it being passive in your tax situation and pay whatever the bill it is and whatever your professional people tell you, then I hope this episode will be help you in navigating your this tax season, but also moving forward forever in the future. So number one, the first number is the strategy. Anyone come to us to talk about strategy, tax strategy, we always advise that we need to start with assessment your tax, where things are. You cannot actually have set a goal and also have a strategy moving forward unless you actually know where your things are at. So tax assessment is very important. You need to know, okay, what is actually going on into your tax return? On your personal return or your business return, is the revenue? Is that's cost of goods sold? Understand it. And that is where tax assessment coming in. And I think this is perfect time because you are working on your 2024 tax return right now. And thus give you the snapshot of where your tax situation look like. There's a lot of business owners have like a ton of business, have a couple S corporation, have a LLC, have a here and there. And so understand where all your things are in terms of tax. How each of them playing into each schedule in your 1040 is super important. One other thing is client customer normally like come to us and say like Fiona, last year I only paid like $10,000 in tax, but like this year why suddenly I become $40,000 in tax bill? Then that's just like you need to have a professional explain for you, because when all the things that you make earning, especially if you have a multiple business, that is where every single part of your earning it will play together in your form 1040. And you need to know, okay, what is schedule and what it work in your situation and how it's become a part of your total taxable income. That's help you, okay, this is why it's happened and where I am at. And so that is number one recommendation is need to have a tax assessment. And this is perfect time because now you're working in your 2024 tax return. So you basically have a snapshot where it is. And if your professional people don't explain for you about what is going on in your tax, you need to let them go. No, I'm seriously, because why? If you make only $50,000 in W-2, that is fine. You don't need to have someone to explain a lot because there's not much going on into your tax return. I don't mean to insult other people, but this means that there's not something like complicated in your tax return for us to explain. But if you have a business, you have an LLC, you have S corporation, C corporation, and you have a multiple source of income, you need a tax professional, a CPA, whoever take care of your tax, actually sit down and walk you through your tax return to let you know, understand line by line what is going on this number on your tax return. If they don't do that, let them go, find someone else, because that one single thing help you to have a snapshot of your tax. Number one. Number two, from there, you have a strategy. And one strategy coming in, it will save you 10, 20, 30, $50,000 in tax. And this is not like a illegal way to do, but this is like a legally strategy to do with it. But without understanding where you are in your situation, there will be nothing in terms of strategy moving forward. And so I'm honestly to recommend that if your CPA, your tax people don't do this part, let them go. And one of the things that our company do different from anyone on the market is that we always offer people 30 minutes to walk them through their tax return. And that's help them to understand what is going on with their number, give them the snapshot, and that's help them to determine whether what they want moving forward into like 2025, into the future years. So number one is the snapshot of your tax situation. Number two, strategy two is choose the right structure. And I mean, like people always say, oh, you need to become an S corporation. You need to become an LLC. You need to become C corporation. Every single structure has its own role into your tax situation. So for example, if you have a operating business, this means that you provide service, you have live products or restaurant, many different kind of service or product, the business that make you have a regular earning from that business. And if it's make the net profits more than $50,000, I would recommend to use this as an S corporation. Select it as an S corporation. That is where you would save a lot in terms of tax, because S corporation is help you to save like 15.3%, half of 15.3% on the self-employment tax, and save a lot of money on that itself. But if you have a rental property, most of the time rental property people don't recommend to become an S corporation at all, because for after you sell property and the distribution out of it is make things very complicated. That is why depends a lot on what type of your business, the nature of the business, then you build it itself in the different way. Or you have a lot of asset that you want to hold it, you can have a holding company that to hold multiple assets and build assets into the long term. That is wonderful too. But don't convert this to become an S corporation. It's basically hold assets for you, like rental property or investment property and those things. And number 3 is C corporation. C corporation is a lot of benefits if you have an end game, end goals is to sell the business. So if it's like in the next 10, 20 years, you want to sell the business, well, C corporation has a lot of benefits because you can use the qualified small business corporation stock, and that help you to avoid a lot of capital gain if you sell the business. It also helps you in terms of like if you want to raise funding or eventually you want to go public as IPO, then C corporation is there to help you. And S corporation not gonna be like have you in that situation at all, because S corporation has limit of the number of shareholders. So you cannot like become an S corporation and raise funding. And most of the time, I don't think that like investor they will invest into the S corporation at all. So that is what it is. Like depends a lot in the nature of your business. Depends on what is your end goal. And each of them has the advantage and disadvantage in terms of tax. So depends on what is your goal. Each of them will serve their own purpose. So strategy number 3 is maximize your deduction. And maximize your deduction depends a lot in terms of your bookkeeping. And I just tell you this, it's like bookkeeping is an extremely important in terms of financial report and in terms of financial management is one thing, but in terms of tax is the second thing. Why? Because when you do the bookkeeping right, your tax return is so much easier to work on because you have all of the expense, all of the deduction is coming into your tax return. Your accountant and we like CPA, we don't need to spend countless time ask you question whether you have this spend, whether you have that spend, and you separate your business checking and credit card out of your personal checking and credit card, because when you link all of these business transaction into a software accounting software, you almost capture every single deduction and expense that you have during the year. If you don't do that, at the end of the year, you will like independent mode of like how to capture all of these spend together, how to make things that you're not missing anything, or whether you missed what type of deduction. So the more complex your business is, the more important the bookkeeping part need to play out. And couple of the spend that you need to take into like home office deduction. If you are an S corporation owner, can you get reimbursed for your rent on it? Your meal and traveling for the business, for conference, for business purpose is like tax deductible. But of course, they always have the rule in terms of allocation, how much the percentage is for the business and how much was less is like for vacation, for personal purpose. And then like remember all the sections 179. Remember that if you buy a business, then you need to make sure that you take into account of your depreciation of intangible assets, because you buy the business, it has the value of on itself too. Strategy number 4, pay yourself in the smart way and stop overpaying tax. This is where you need to balance between your W-2 earning, if you S corporation, between your W-2 earning and your distribution. But if you are a C corporation business owner, then there will be like dividend and salary for yourself. And then you need to calculate it balance in the way that because C corporation is pay the tax on its own. So you need to be like, make sure that you balance this out. How much is the dividend to you and how much is the company need to pay tax? Because in C corporation, it's very easy to, it's double tax. So company pay tax itself, but anytime that you get dividend, you also need to pay tax. The shareholder need to be pay tax on it. So you need to calculate and balance this out to avoid that you actually overpay tax. If you don't calculate it in the right way, it's very easy because the W-2 earning, when you have a W-2, it's basically a fixed amount. And so when this is a fixed amount, you don't have any deduction go into your W-2 at all. But what it affects in your tax overall is that is change your tax brackets. So if you issue yourself a W-2 $100,000 in salary, it will different tax brackets if you have issue yourself $150,000 because if you combine with your spouse or if you file jointly with your spouse, it changes your tax brackets. And when you change the tax brackets, it changes your tax rate. So make sure that you actually play this part in. Otherwise, it's just like end up like overpaying in terms of tax too. And strategy number 5 is get all the benefits of retirement accounts and SSA account. That is including solo 401k, the SEP IRA, the traditional IRA, and the Roth IRA. So it depends a lot in terms of your situation because Roth IRA, and that could be work if you over the limitation of income that you can contribute because they limited how much is your total income will allow you to actually contribute to a Roth. If you over the limitation, you cannot. Basically, need to have a backdoor Roth IRA. So it's just a little bit more step to do with it. So make sure that you understand, okay, what is the rule of all this account and whether you are eligible to contribute for it and how much is the maximum contribution for it. Because this account alone can save you around 20 to 25% in your tax bill. So this is like a huge way to save in terms of tax, who actually send more money to the government than to actually invest into your own retirement account. And also consider about SSA account because SSA is a triple tax benefits that you actually is a pre-tax. So you contribute to it to reduce your taxable income. And then you can reinvest in that SSA account if you don't use the money and it's grow tax-free. And anytime that you get distribution from it and use for medical expense, it's also tax-free too. So it's just a triple benefit in terms of tax. So I think that is all. In summary, today we talk about the tax playbook that you can use to save you tens of thousands of dollars in tax. Number one, you know where you are at in terms of tax. That is called tax assessment. Have the snapshot of what your tax situation look like. Number two, choose the right tax structure for your business, your company. Number three, make sure that you track and maximize your deduction. Get your bookkeeping done right. Number four, pay yourself and allocation of distribution in the right way. Number five, use your retirement option. I hope that this episode will give you a blueprint for you to actually navigate your tax season this season, but also confident that you will be in control of your tax moving forward. And I appreciate your time today. Let us know if you have any question, rate us, review, and I am looking forward to the next couple episodes. Thank you and bye-bye.